Hello and happy fall. I'm Steve Balch, the Director of Wealth Management and Financial Planning at Certa Financial Planning, here to give you our monthly market update for October. From a macro stance, there's no changes to the macro scales this month. The market trend continues to be positive, with 8 of the previous 9 months having a positive return. Year to date, the market is having its best start since 1997. Fed policy is in a positive trend as their rate cutting cycle is here. The first Fed cut was 50 basis points last month, with 2 additional cuts of 25 basis points expected in November and December meetings. The government continues to run record deficits, providing liquidity and a positive boost to the economy. Leading economic indicators remain neutral for now, but September's positive job growth, along with an upward revision of the previous 2 months, are positive changes we will be watching. Overall, economic growth is slowing, but it still remains positive. Valuations on large cap stocks continue to be stretched, but other more attractive areas of the market are starting to rally. If this widening breadth continues, this could be a positive sign for a longer bull market run. The market regime continues to be a Goldilocks environment, providing us with a risk-on environment. Inflation continues to cool while economic growth continues to be positive. From a business standpoint, the U.S. economy continues to be resilient, even as parts of the economy show signs of slowing. GDP growth is projected to be muted in 2025, but signs of an imminent recession continue to be pushed back. What are the 3 questions we're monitoring now and going forward? Will there be an October surprise? What is the Fed's next move? And will good times continue? The market has had a strong start to the year, with the S&P 500 up over 20%. However, this could mean there is some trouble ahead, as October has been lower 7 of the 9 times that the stock market is up 20% or more heading into this month. Additionally, October tends to be a weak month for stocks in an election year. Stocks have been higher 10 of the past 11 months. A break at any time could happen for any reason, but this is not a reason to panic, as Q4 tends to still rally into the end of the year, and would expect this to play out again in 2024. One thing to note, October hasn't been lower 2 years in a row for 15 years. It was down last year, so maybe we will buck the trend again this year. What is the Fed's next move? The Fed cut interest rates at their September meeting by 50 basis points and officially ended their rate hiking cycle. Overall, the Fed is confident in the strength of the economy and seeing their inflation target of 2% coming soon. However, they do have concerns about the softening employment market and signaled they plan to cut 25 basis points at each of their next 2 meetings. After a strong September jobs report, the market has shifted expectations and moved away from another 50 basis point cut before the end of the year. For now, the market and the Fed seem to be aligned, but if labor markets continue to soften, a shift in policy may be warranted, and the Fed may have to be more aggressive. Will the good times continue? As stated, the Fed cut rates last month, and I'm sure you saw headlines about Fed cuts correlating to recessions and market tops. However, there have been 20 times the Fed cut rates when the S&P was within 2% of the all-time high. Based on the day before the cut, this was the 21st time that happened. The market has been higher at a year later all 20 times. The average return for that year was 13.9%. History bodes well for the rally to continue. Additionally, when the S&P 500 has been positive the first 8 of 9 months, it's never been positive all 9 months. Historically, Q4 has been even stronger, with an average gain of 6.6%. Things are pointing for a strong finish to the year. Our positioning and outlook. The fourth quarter is here, and historically, this is the best quarter for stocks. Our models continue to be overweight growth strategies while underweighting our tactical and alternative strategies. We continue to stay neutral on preservation for now. As discussed earlier in this video, October has historically been volatile, especially in an election year, and we may see a correction or pullback play out. The market is stretched, so short-term volatility would not be surprising. Nevertheless, we do believe the long-term trend is still in place and will continue to adjust accordingly. For now, we continue to monitor the markets and rely on our internal research as we stay the course. We thank you for watching. As always, please feel free to forward this to anyone you believe can benefit from this information. If you have any questions, please reach out.